So we have a lot to talk about. We're watching Broadcom shares. They're moving a bit lower here. Jenny Horne, host of Next Gen Investing, is with me, and she's taking a look at this name.
Yeah, Broadcom. I know that we're seeing, like you said, a slight move to the downside here, Nicole, but I also want to note that this has been one of the most unstoppable forces in all of big tech. I mean, and I feel like oftentimes they're excluded from these key Mag 7 conversations, but Broadcom is such an impressive company, made new all-time highs, I believe every session prior to yesterday, but each day of this week outside of Thursday was just taking out another high. So seeing a pullback today, but again, I do think that this is more of the lofty expectations, not so much a story of any weakness. Now, they did give expectations that did slightly edge past those streets expectations, and also did highlight that now they see their July quarter guidance at around $15.8 billion. That was above expectations at around $15.7 billion. Though we did see, again, the company did match right now with a record second quarter as far as its revenue expectations. That was up 20% from a year ago to $15 billion on adjusted earnings per share that were $1.58 that beat the expectations as well. So a clean beat. And their CEO did call out the continued momentum in the AI semiconductor solution space, saying that their VMware business helped boost this performance. He expects AI semiconductor revenue to come in at just over $5 billion in terms of the current quarter, which would actually mark the 10th consecutive quarter of growth as their AI hyperscaler partners continued to invest, he said. April quarter AI revenue grew 46% from a year ago, and I think that that's huge. And Broadcom right now does remain one of the most well-positioned names to benefit from the fabless chips that it provides. I mean, the company's switching business, which does make up about 30% of its total AI revenue, is still expected to grow in the next few years as customers are expected to scale their AI chip clusters. So there's a lot to like about this report. And again, I think this was an expectation, a relatively higher valuation call in terms of like why we're seeing some of this pessimism today. I'll be surprised though if we continued like at this pace of downside pressure, as markets are pretty firm here. So maybe all things considered, this feels like a pretty nothing move, and it's all right now as it stands well inside of what the options market had been implying for volatility.
Yeah, and look, I mean, a lot of folks still are very hot on this name, the semiconductors overall. The group is highly loved. And as you noted here, semi solutions were up 17%, infrastructure software up 25%. So the expectations were high, but it did have an earnings beat. You know, the group overall has really led that May recovery. I mean, NVIDIA for one, right?
I mean, absolutely. And I think that that's why we've seen, I mean, like we added 1.7 trillion in market cap for like the biggest tech names in the month of May. And I think because you have now these trillion-dollar companies, there's only a handful of names that can boast that title, Broadcom, of course, being one of them. And I mean, we're rarely, even for NVIDIA, which had a really phenomenal month of May and now has actually pushed itself back into positive territory on the year, it still remains off of its highs by 8.5%. Broadcom, technically speaking, is one of the most, I mean, astounding charts we discussed, because we pulled back about 2% from those highs, but we've risen 102% from lows. We'll also up now about 10% on the year. So I mean, it's been especially fun to watch this week when we saw new all-time high after new all-time high.
Right, understood. What about Lululemon? Now, this is getting lots of cuts this morning. Big loser in the S&P 500 now.
I mean, this is a bit shocking. I don't recall that I've ever seen Lululemon shares. I believe it was once around the pandemic or around maybe some weakened guidance. I don't think I've ever seen Lululemon make this much of a move to the downside, frankly. So hurts my heart as a Lululemon enthusiast, but definitely things to be concerned of. And I think this was all framing. Their CEO and their management was so downbeat on the entire U.S. sector, saying consumers are spending less, consumers don't have an appetite for right now some of their products, which they also did say they're going to implement some potential price increases in the second and third quarter. And that was, I think, some of the worst of it. There was definitely still things to like. We did actually see from a solely first quarter perspective that its revenue did rise on a year-over-year basis. We also did see first quarter net income of around $2.60 per diluted share. That also marked growth on a year-over-year basis. And they now expect their full year diluted earnings to range between $14.58 and $14.78 a share. That was down from expectations on revenue that also came in slightly light at around 11.15 to 11.3 billion. Both those targets missed consensus. So I think there you go. I think that you've downbeat sentiment, downbeat really commentary from your leadership, and that's the recipe for disaster when Lululemon used to really like pioneer earnings moves. I mean, it was so many quarter after quarter, just unstoppable. It has this now power of 3 long-term plan, which is actually expected to come to its halt or to its end in 2026. That's been massively growing their international presence as well as their menswear. But none of this was really a point of optimism on the call. And I think that you have now Lululemon uniquely positioned reporting at the tail end of an earnings season. So all we've heard from is retailers that have done seemingly extremely well, or maybe just better than feared, like an Abercrombie and Fitch, and Urban Outfitters, and American Eagle, all these names slightly different, but have said, hey, we're not really seeing a major impact to our consumer. Then Lululemon says, oh, well, the U.S. consumer is so strained. It does make you say that this is a blame game right now, and they're looking for some of these pricing issues to blame on what was, all in all, unfortunately, some Lululemon-specific problems.
Yeah, without a doubt. I mean, it's interesting because we did get a jobs report today that showed people have jobs more than expected. People are making money more than expected. So that may bode well going forward. Jenny Horne, thank you so much. It's great to see you and watch Lulu down 18% today. Thank you for a good look there at Broadcom and Lululemon.